cash crisis worse. About Venezuela once again. Systemic important banks. They removed the 1,000 called monetary.
All right, we are live for a Monday midday news update. It's been a minute since I've done one of these, but came across an interesting story that I couldn't pass up, so I thought I would take a minute and just share my thoughts, whatever, and get your thoughts as well. Lots of things unfolding, and as always, the contagion, the doom loop that I mentioned several months ago now is fully underway now. There's no reversing course. Now it's more so of preparing for, bracing for impact, and just waiting to see how the regulators, the government, reacts to what's going on in the banking contagion. But came across an interesting video clip that I want to play for you guys in a minute, and let you guys hear directly what someone who's in the investment space, someone who's kind of well respected. I follow his YouTube channel, and he's very insightful with what he delivers to his investors. So in reference to the government possibly withholding or freezing withdrawals in general, just because of the continual pickup of bank runs that's happening. And it has a lot to do with the individuals that are heavy hitters, that are above that 250,000 threshold, and them not having confidence. So confidence is shattered, as I mentioned a few weeks ago, and now it's a matter of seeing how things unfold. So I got a couple of headlines here I want to share with you, get your take on it, and then we'll probably jump into this later on. But let me acknowledge and make sure everything is going smoothly on my side here. Let me know if the audio is good. Won't be long. Just want to check in for a quick minute and share with you what's going on. But let me just dive right in to what's going on. But before I do that, anybody might be new to the community, hit that thumbs up button, show your support for the channel. Hopefully more people are notified and able to plug in and get a chance to hear some alternative perspective as to what's going on in this monetary fiasco we're under experiencing. So, and also connect with RTD on all these alternative platforms here, just in case we get disconnected here. So, all right, let's jump right into it. So let me just share with you. I put together something what I call the bank run doom loop, and it's sweet and simple, as you guys can see here. Once one wheel gets to turning the rest of it just continues to follow suit. So as you guys can see on the screen here, this is the process of what it looks like for a run on the banks, and it has everything to do with confidence. And so if you look at the very bottom here, it says confidence falls, and it says it leads to more want to remove their savings, and then the banks run short of the funds that's not there because it's more digits on screens than it is actual physical paper. And then it just leads to more savers removing their deposits, and it goes on and on and on to the point where people eventually get to realize that there's nothing really there, and all those promises that were given and made are not really going to be able to be upheld. So thought that was just something to put together for a quick little visual aid here. But I just jump right into the main story of the evening. So here we have from the Daily Huddle. It says U.S. government may freeze. Let me make sure I'm saying this. U.S. government may freeze American bank withdrawals as currency panic and capital flight mounts, macro guru Hugh Hendry mentions. And so I thought I would just spare reading you this and just let you hear it directly from him. So I'll play this clip, and then we'll jump on and share our 2 cents on it. Give me 1 second here if I can, and I'll pop this up here.
The deposit flight is so extreme. I mean, I'm sure.
Error on my part. Give me 1 second. Let me remove myself here. Thought I had it set up, but I did not. As always, when you're doing things on the fly, it doesn't work out according to plan. But I'll make the most of it.
Bloomberg, you must be pulling up the M2 series, yeah? And you've seen the deposit flight is so extreme. I mean, I'm sure on Bloomberg, the deposit flight is so extreme. I mean, I'm sure on Bloomberg, you must be pulling up the M2 series, yeah? And you've seen the biggest waterfall decline in M2, right? Now, what that means, that M2's deposits is not loans, right? But what that means is that's the deposits fleeing the system and going into money market funds, okay? When that could reach a crescendo where, like I say to you, the Treasury and the Fed may have to come in and actually restrict your right as a U.S. citizen to pull money out of the U.S. banking sector.
Pause. So hope you guys heard that, but he basically said that when, based upon capital flight, where people are removing funds from the banking sector to the money market funds. Government may be forced to come in and freeze American deposits. And at that point, the two people interviewing him was just completely frozen. It was like, they weren't expecting to hear anything like that. And so it hasn't happened. To my knowledge, let me know in the chat, it has never happened here in the U.S. In the modern era where the entire banking sector was frozen deliberately by governments to control the unwinding of this debt Ponzi scheme. And so it's something that could really cause a lot of concern outside of what's currently underway right now. But then again, for those who are paying attention, realize what's going on and how severe things are and can become, you're realizing this, that we've been mentioned several times before, as to trying to minimize and remove yourself from harm's way, especially when you see a train coming. You can't stop it. Only thing you can do is try to get out of the way. And so hopefully hearing it from someone who is in that world, and especially on Bloomberg, on national television, that's kind of a big deal, I think. All right, so let me keep it moving. A couple of things here. So I encourage you guys, you want to find out more. And of course, his suggestions, they ask him what's safe. And then commentators was trying to say, is gold the place you want to be? He's like, I'm not really convinced, because when there's a sell-off, people are going to sell their gold. Then he talked about the long-dated treasuries and saying that that's where the flight will end up, heading towards. And so once again, I think as this unwinds, it's going to be more than just a banking situation. It's going to end up being a currency crisis at the end of this, because the response might end up being, it can go two ways. And I've of the mindset that we would tend to believe, based upon prior events, that the government will pivot, they'll change course, they'll come in with QE to infinity and beyond. But because to me, everything is being done strategically, I don't think they're going to respond in typical fashion by reversing course, continue to do more of the same thing, which doesn't lead them to their intended goals of trying to let the system crash so they can reboot it, so that then they can reintroduce an entirely new monetary structure. And to pivot, reverse course, begin QE outright, and based upon prior events, would be more of the same. And they want to reintroduce a whole new monetary system. So that's why I kind of feel that we won't get the typical response. So therefore, I wouldn't be willing to bet in government liabilities at the same time the rest of the world is moving away from government U.S. debt instruments and things of that magnitude. So anyway, I won't bore you more of that. Let me just get to more headlines here. So here's a primary issue at hand. It says half of U.S. banks on the brink of insolvency. And so this is something that we will hear more about as time moves underway. But it says recent reports suggest that nearly half of the 4,800 banks in the United States are on the brink of insolvency, having depleted their capital buffers. And so it says the Telegraph reported that a group of banking experts have warned about a dire financial state of the United States banks. And it says Stanford University banking expert Professor Amiri Seru stated that around 50% of the U.S. state lenders are currently underwater. And so to me, that right there is more credible than waiting on any of the government's statistics or figures or their economists or even the Federal Reserve and their board of governors trying to come out and saying that things are just fine. Don't worry about it. They're there. And to piggyback on that even more, I'm sure everybody here saw the November Financial Banking Committee where the gentlemen were at the table talking about the need to not reveal too much to the public because it will cause concern for the average depositor to want to find out more about what was going on in the banking sector. And then so he's basically saying there's just some things that's better left unsaid, in my own words. But, and when that whole thing came out, I have a video clip, but I didn't have it prepared, so I'll spare you that. But there's more enough proof out there for people to realize that, as this sign says behind me, crisis, all these downward trajectory stock figures here. Yeah. But the good thing is people who tuned in here, you guys know what's up. Okay. And then if this isn't first bad enough, here's just more information here. Let me get. It says here, the Borg identity. U.S. bank runs escalates. Deposit outflows top 360 billion in the last 3 weeks. Fed rate hikes to combat inflation is crushing regional banks. and just more of the charts here where you guys have seen the M2 money supply deposits just shrinking. Then we have here, this is what I wanted to bring up. Let me make sure this is, you guys can see this. Okay, yeah. I'll zoom in more. So this is a screenshot from this article here by Confounded Interest by Anthony B. Sanders. Does a good job of posting graphics that are up to date in real time. It says, and they're all sinking faster as smaller banks than larger banks. And so here, as you can see, the green, the red, and the blue. So the blue is the larger charter banks. And so they're sinking not as fast as the red, which is the smaller banks. And of course, the big boys, the large banks at the very top, and foreign institutions that have a much wider, globally systemic outreach. They're not as bad. But then again, the small boys and the medium-sized boys, they're having issues. And then it talks about here, meanwhile, FDIC bridge loans are exploding in terms of usage. So since the middle of March, when all the banks started to unravel, Silicon Valley, Silvergate, we know how the order of those, we saw the green, which is the FDIC deciding to extend temporary loans to these banks to make sure they have enough capital to buffer their deposits, their needs. And so here we have, as of the beginning of May, to the far right, this long green thread here shows that there is a continuous inflowing of FDIC funds to the banks to make sure that they have enough capital to meet demands. And so it's only going to get worse from here, because this is just the banking contagion. Let me add on to that a little bit. So here is a chart from today of the price activity of the regional banks. And as we can see on the screen here, we have some new banks popping up. We got CB Financial Services, we got Customers Bancorp, we got Village Bank, we got Glen Burnie Bancorp. We got all these banks I've never even heard of, but as of right now, as I'm speaking, they're down 6%, 6%, 5%, 4%, 3%. So the banking sector in general is under extreme stress, and there's no end in sight for any of these smaller boys. That it's good to say they're under a lot of pressure, because the depositors are moving their funds from them, taking them to the big boys, or putting them in mutual funds or the money market accounts because they're paying. And so we'll see how this plays out. But yeah, okay. And it doesn't stop there. This is something also that should be of concern, because what typically will be considered just political jawboning of politicians playing, we all know the debt ceiling is usually going to be increased, but it looks like what has been put forth as of now is not good enough. Therefore, they're trying to scare more people. And I believe that whether it's, the debt ceiling is expanded or not, there's still going to be issues, just because confidence is already shattered in the banking sector. So the dominoes are already falling. It says Yellen warns against debt ceiling talks with gun to the head of the American people. And so literally, like, just going back and forth, she's saying that it's like holding a gun to the American people's head, because it can only hurt them or us. So anyway, this says U.S. Treasury on Sunday warned that a failure by Congress to act on kicking the can down the road or continue to raise the debt limit — it's not even a ceiling if you keep raising it, of course — could trigger a constitutional crisis with the consequences of financial markets and interest rates. And so constitutional crisis is a very strong word that came out of Janet Yellen's mouth. And it doesn't even begin to touch how severe it will be, or already has become. And this has a lot to do — let me just share with you more things here. I love sharing this. We're already at a point of a constitutional crisis, just because this current instrument right here, it's not looking too pretty. And what they're doing by trying to expand the monetary base even more, it's only going to hurt more confidence from an international standpoint, to where people realize that this piece of thing here, purchasing power is already shot, but it still spins. So get all the bang you can out the buck while you still can. All right, and then there's just another story here that let you know where the world is running into. This is a good and a bad thing, in my opinion. It says Bolivian. Let me go back here. Bolivian bonds jump after Senate approves bill to monetize gold. So the Bolivian government has just remonetized gold. They put gold back on a pedestal, saying that it is now officially going to be used as a reserve for us, so that we can have more capital in our system. Why? Because of the dollar shortage. So Bolivian government bonds jumped after country Senate approved last Thursday a central bank bill that would allow the government to monetize its gold reserves, a key step to ease a dollar shortage and tame a growing financial crisis. So, good part is they're putting gold back on the pedestal. Bad part is they're using gold as another form of a currency where they'll be selling it more than likely to acquire USD to make do on their bills. And so it will probably lead to gold leaving the country because it's going to be sold. And so as more nations look to monetize gold and they use it to sell to get USD, the gold flows will continue to go to whoever buys it, which will happen to be the central bankers on the Eastern Hemisphere that'll buy it and look to add it to their reserves. So their gold stockpiles will continue to increase. And all these smaller nations that are letting their gold leave the country for dollars, which is a part of just the business structure. But to me, it's a damn shame, because why wouldn't you just make your currency stronger and keep your gold and then do business with countries directly with your currency so you can hold on to something real and not let your gold leave the country? But this is just what's happening. And I think between the constitutional crisis Jenny Yellen mentions, the bank run is escalating, as well as just the fact that there's a possibility, as is dominoes continue to fall, more confidence will be lost. Therefore, the government will step in, the Treasury will step in, FDIC, the central bankers will step in, and probably, hell, before summer really gets underway, we could see some type of event where the banks decide to impose restrictions on the average person looking to move funds above a certain threshold, and they'll try to basically keep it in the system so it can't leave. And we all are aware of what's going on here. So continue to get your weight up as always. You know, the best thing to do is to become your own central banker so that you won't be dependent or solely upon broken promises. And so just let me look at the metals figures real quick and before I log off. And so we got silver at 25.64 and gold at 2027. So anyway, but thought I would just check in real quick, share my 2 cents, let you guys hear that quick little video snippet from someone who's in the business and knows directly what's going on here. So anyway, leave a comment down below. We'll check in tonight. Hope everyone's doing well. Have a great day. Have a blessed day, and to continue to just, stay prayed up, blessed up, and get your weight up. All right, my good people. See you later. Peace.